Under Section 129 of the Companies Act, financial statements must be supported by notes to accounts. In the CA Advanced Accounting exam, these working notes act as mandatory legal justifications that can carry up to half of the total marks for a question. Students often leave a trail of unlabeled calculations in the margins, hoping the examiner follows their thought process. A better approach is building a designated working note that maps out your logic in a structured format. The marking schemes used by the Institute of Chartered Accountants of India are designed to reward the visibility of your process. Examiners look for this structured evidence to award step marks throughout the solution. To see how this presentation works in practice, we will calculate the maximum permitted buyback of shares. This requires applying 3 specific statutory tests mandated by the Companies Act of 2013. Mastering the layout for the shares outstanding, resource, and debt equity tests proves you can handle both technical accounting rules and professional disclosure requirements. Start by constructing a table titled Working Note 1, Determination of Maximum Buyback. For the shares outstanding and resource tests, write the formula in text before substituting any numbers. The debt equity ratio test introduces a complexity where the law states that post-buyback debt cannot exceed twice the post-buyback equity. Under Section 69, buying back shares from free reserves requires a transfer of the nominal value to the capital redemption reserve. This means your future equity decreases in 2 ways, through the buyback payment and the CRR transfer. Solving this without confusing the examiner requires declaring your variables clearly on the page. Arrange equation 1 to calculate the maximum permitted buyback. This takes the present equity, subtracts the CRR transfer X, and then subtracts the minimum equity required to maintain a 2-to-1 ratio. Then set up equation 2. This links the total buyback Y to the CRR transfer X by using the ratio of the buyback price to the nominal value. Pause the video here and try setting up these 2 equations. Use a present equity of 2,880 KRs, minimum equity of 1,600 KRs, a buyback price of 30, and a nominal value of 10. Your page should show these figures substituted into the formulas. Solving for X gives 320, which results in a maximum buyback Y of 960. By isolating the equations this way, you provide a clear audit trail. This structure helps the examiner verify your logic and award step marks, even if the final calculation contains an arithmetic error. The final architecture of the page places the main Schedule 3 balance sheet or journal entries at the top of the page, with the working notes clearly labeled below the main answer. Practice consistent cross-referencing. Schedule 3 requires each item on the face of the financial statements to be cross-referenced to related information in the notes. You can demonstrate further technical depth by adding a footnote at the bottom of the calculation that cites the specific statute, such as Section 68, subsection 2d. This approach relies on 4 pillars: stating text formulas, defining variables, summarizing data in tables, and mandatory cross-referencing. Adhering to this layout creates a professional audit trail, providing the clarity examiners need to award the marks your technical knowledge has earned.